Hey, it's Clay at claytrader.com, and I want to share some results with you that I'm very proud of. But first off, and I'm being totally serious here, congratulations and well done to you, because most people will never have clicked to watch this video. They didn't see, here's how I made $100,000. Here how I bought my yacht with my trading profits. If you've been on social media, you know exactly what I mean. In this title, it's about trading results and then losing money, but yet you still decided to click on it. You didn't need to see all the gimmicky type late night infomercial sales tactics about, some guy sitting there with a stack of cash or anything like that. So I commend you because, like I said, and I guarantee I have lots of data on this. It's crazy how you put some sort of video where you make an amount of money. Wow, do those get a whole lot more videos than videos like this where you'll look at the views and you'll notice our views are down compared to other types of videos. So I congratulate you. I thank you, and a job well done, because you are separating yourself from the vast majority of people by even giving this video a chance and watching. So well done to you. So let's establish some context here about these results and why I am so proud of them. Recently, I did this video, and you're more than welcome to go on the website or just look through the YouTube channel and check it out. But I tried a little strategy. I'm not going to go down all that because, again, you can watch the video. But within that video, I started talking off, and I showed these results right here. And the big learning lesson, and as I mentioned in that video, it wasn't necessarily a learning lesson, just a reminder. But yeah, that's a very big number. That was a very, very big loss. And within the video, I talked about, this is what happens when you do this. This being superhero trading. You start breaking rules, you do things that you know you shouldn't be doing, and you're trying to act like a superhero. And many times, maybe it can help you out, but all it takes is one or two, and it can really, really backfire on you, like I talked about in the previous video, and like you're seeing up on the screen here. I mean, that day really put a big dent in my month. Sure, I was able to still close green, but had I not done that superhero trading, just that one time, things would have been much different. So the whole idea there was, don't do superhero trading. When you do superhero trading, bad things can happen, as you see right there. So catching up now to the results that I'm very, very proud of. Let's just take a look at my first 3 days of the week. You can see up there, very nice. I was averaging right around the $500 per day. And that's kind of my motto. If you've been around a while, I'm sure you've heard me say it before, but $500 a day keeps the day job away. So that's where I'm at now. It's not a hard line rule where I absolutely need to get $500, but just like I said, a broad trading motto. That's where I stand. And that's where the first 3 days of the week. I was right on pace, doing very well with that. And then I want to share some more context here, and let's take a look at the markets over the next couple of days, specifically this very next day, because that'll help kind of add in some additional, like I said, perspective into what's happening, why it's happening, and then how it can get so dangerous. So here we are looking at the SPY, which is, if you're new or just getting started, this is just a way to quote unquote look at the markets. It's just pretty much a big summary of the markets. And this is also what is known as a line chart. Quick disclosure there, I'm only using a line chart here because I realize some of you may not know what a candlestick chart is. And my overall idea is just to give you a general idea of what's going on, but I don't use line charts. But like I said, this just makes presentation a little bit easier because I realize some of you may have never even seen a candlestick chart before. But what essentially happened on that day was that the market came down a whole lot right here. So point here being, at this point, it made a lot of sense to be bearish. It made a lot of sense to be thinking, I think prices are going down. And if you're brand new, believe it or not, you can actually make money when prices go down. It's called shorting. It's called going short. So if you've ever heard those terms, that's what that means, just making money when prices go down. But here you start off the day very, very rough, very, very nasty. So again, it made logical sense. It was valid to think, today's shaping up to be a very bearish day, especially when going into the day, things had already been trending downwards anyhow. So again, like I said, it's not like this is some sort of irrational thought to have, hey, it's looking like things are going to be good, when previously things were bad, and then things started off bad once again. But you can see the rest of that day, it just turned around, and up it went the remainder of the day. And what made it difficult was that there's a lot of little false alarms. Oh, now the price is going back down. Nope, back up it goes. Oh, now it's going to, nope, up. And then even right again. Oh, Finally, the bearish, nope, back up it goes again. So just a very bizarre day, a very choppy day, a day that I would definitely consider very annoying. But that is what had happened. So what did all this lead to? Well, this led to the day right there of a loss of just under $70. Now, the thing is not necessarily the loss of $70, but what really kind of started all this was, the action was annoying, but annoying action, and I suppose to give myself some credit here, but I just can never quite make any trades. In fact, you look there, and those are the commissions and fees that I pay, and if you compare it to the numbers up above, you'll notice those numbers are really, really small, meaning I didn't make that many trades at all. It was a very, very low number of trade type of day. So you combine all these things together. You take that annoying price action. I'm probably still a little bitter about it right now. Not really, but it definitely was annoying. And then you add in the fact that there's a small number of trades, and I'm a trader. You're a trader. Like, we're supposed to be making trades, right? So when you have a small number of trades and it's annoying, and then you factor in and add in, and you take a loss, that is just a total recipe of, you know what? It's time to get out the cape. It's time to do some superhero trading, because that was ridiculous price action, so annoying. I barely made any trades, and the trades I made were losses. But we don't want to do that. Don't be a superhero. And this is a simple, but it's oh so hard. If sometimes the simple things are the hardest things, but I want to share with you just a simple two-step strategy that I would encourage you to use. And that, quite frankly, you should be using. You need to be using if you want to find success and be able to survive as a trader. And like I said, it's simple. Number one, the golden rule, and I've talked about this in many videos before, but self-awareness. Self-awareness is our capacity to stand apart from ourselves and examine our thinking, our motives, our history, our scripts, our actions, and our habits and tendencies. Such a good quote. That's the epitome of what it takes to be a trader, to be a successful trader. You better have self-awareness. And here's the key thing. When you have self-awareness, you could admit that, you know what? I'm annoyed. Wow, I'm very annoyed, and I barely made any trades. I don't like not making a lot of trades. And I don't like losing money either. I am not in a good mental standpoint. So when you realize this, when you're self-aware, a great way to just kind of keep yourself at bay, to keep yourself in a position where you're not going to go out there and wreck yourself like I showed you earlier with that first example, is just to lower your normal position sizing. In this case, normally I was doing 500 shares on the week, and like I said, doing very well. So 500 share lots, but I thought, you know what? I sense it, Clay. I'm being self-aware, I'm examining my thinking, my motives. I'm examining my habits and tendencies. I just had this a few weeks ago. Don't be a moron, Clay. So I thought, you know what? I'll still trade because, I'm aware of it. But I decided, but I'm not doing 500 shares. I will do 100 share lots on Friday, which is what, the final day of the week was going to be here within the context of all this. So let's now see what happened with this following day. So what happened in terms of how did the market act on that next day? All right, so how did the market close out? Well, again, just to keep perspective here, remember, the previous day, which was really annoying, the markets were just going up and up, right? Just up and up and up. The markets kept going. So earlier on in the day, it was looking like things were looking relatively shaky. And in fact, so much so that you had this right here. You had what is known as a trend line, and the trend was very clearly going up. But early on Friday morning, that trend line was violated to the downside. So at that point, again, very rational. Okay, finally, the overall trend is going to continue, right? Because as I already talked about, going into that big day, it had already been going down. So it was looking like Thursday, which was right here, was just some sort of, dead cat bounce, as you would call it in, trading jargon, trading terminology. Dead cat meaning, it's going to roll back over, right? There's a lot of downwards pressure. It's bounced fine. And then you got some sort of confirmation. Hey, look, the trend is broken. It's getting ready to roll back over. And I'll zoom back in here just so you can see a little bit better. Went sideways here a little bit, thinking, all right, maybe this is a little pause before it resumes downwards. But no, all of a sudden, it just decided to start to work its way back upwards. And then look at all these little faulty rollover. So right there, acted like it might go down. Nope, up. Acted like it might go down. Nope, up. And then this one was really cruel. Acted like it might go down. Nope. And then just went up the remainder of the day and basically closed at the high of the day. So a very tricky day. Very, very tricky. Again, it's not like it's irrational to have thought that this was going to be a bearish day for all the reasons discussed, especially when it started off the day breaking through that trend line and looking like it would resume the trend that it had basically been doing the entire first half of the week. But as you saw, that didn't happen. A very, very, very tricky day as a trader. So for me, all that price action, the results ultimately led to right there, you can see the loss of $142. And you know what? I chose so wisely. I am so proud of that. This is like a perfect example of why that strategy of just reducing position size is so beneficial, is so powerful. I realize at the surface, it seems like, Clay, you lost money. Why are you calling that powerful? But do you understand how bad it could have been had I continued in that market environment, which was just crazy? It was tricky. It was one of those silly days that it was just, I mean, it happens, and that's just part of being a trader. But to think of that, something like that occurred, and I was going into it with a superhero type attitude, but yet I walked away only losing $142. Like I said, I'm very proud of that. That is, and you should be proud of it. This video is not to pat myself on the back. I want to encourage you. I want to motivate you that, you know what, if you take a loss, if you have a losing day, but you look back on that day and you're thinking, I didn't do anything wrong. The market was just goofy. The market was just tricky. Tricky markets exist sometimes. Sometimes markets are beautiful. They behave just like they should. They behave just like you think they will. And it's great. But other days they're just tricky. They're goofy. They don't really behave like you would normally think they would. And if you have a loss on those days, and assuming it's a controlled loss, fantastic. Don't get down on yourself. Please, you're not alone. In fact, you're doing it the right way. So just keep perspective. And hopefully I'm conveying that I want you to just stay strong. Keep the confidence. It's okay. You're not supposed to have green days every day. And to add a bit more perspective about why I'm so proud of these results, that added up to 1260 total for the week. Which, okay, 1260 for the week. Yeah, maybe not sounds like a lot, but for me, and again, I discussed this in the video that I referred to at the beginning of this video, but what I learned about this strategy that I've been, continue on with here is that it allows me to trade for basically 1 hour a day. Now, some days during the week we're slightly above, other days we're well below. I think one day was like 15 minutes and I was done. I'm like, all right, I'm good with that, 15 minutes. But point here being, right around 1 hour per day is what these results were generated in, and 1 week has 5 days. So you look at the 1260 and you divide that by the just 5 total hours on the week, and that actually still equated to $252 per hour. I'll take it. I'm happy with that. But the whole thing is, and the week, I won't go as far as saying the whole entire week could have been wiped away, but if I had stayed at those 500 shares, it is very, very reasonable to think that I could have taken a big old chunk out of my week because of that superhero kind of mentality. Oh, I want to get stuff back. I'm annoyed. And then combined with the fact of just how tricky the market was, that is a recipe for disaster. And just to add in and really to show you that tricky days do occur and it's okay. On this exact same day where that, where the market was just goofy, where the market was tricky, there was members, and this is what I love about the community that I offer, that we're just flat out disclosing everything. So here we have a member, and this is some context, but I mean, this is a previous day, but those are the sorts of numbers he's working with, right? So, because when you see his loss, you're going to be like, oh man, that's a big loss. But I'm trying to keep things in perspective that, yeah, you know what? He has a bigger account. He's a very good trader. He knows what he's doing. And, so there is a little baseline here. But on this exact day, he says right there, I keep setting up for a dead cat that never materializes today. Exactly. I showed you that, right? I mean, it looked like it was going to roll over. Nope. Looked like it was going to roll over. Nope. That's what he means by he kept thinking there was a dead cat that was going to be finally materializing. Again, totally rational on his part. It's not like he's running around doing random stuff. that made sense. It was a rational thought process. But then he made the comment about getting death by 1,000 cuts. But here's the thing is, he kept things small, right? He wasn't going big. He wasn't increasing position sizing. And he lost on the day, 27.50. Now, on the surface, again, looks like a big number. And it is a big number. But when you compare that to wins that are over 10,000, okay, within the grand scheme of things, you see how the numbers work out. But the pointer being, to this member, he chose wisely. He managed the risk properly, managed position size. So yes, it was a losing day. Welcome to the club. I think a lot of traders had losing days on Friday because it was so tricky. It was a goofy day. But he did it the right way. But there's also a couple members, and by no means am I coming down on them. In fact, they know that I know that they're good traders, and they are good traders. That's why I'm using them as examples here, because first off, it's a sign of respect, because I commend these people for not trying to hide their losses or anything like that. They're just shooting straight. So the first example here, again, this was all for Friday. So that was on the exact same day, kind of all this stuff people were talking in the chat room. But to add some context here, this member from a previous day had a bunch of losses, right? In fact, he was wrong more than he was right. But wrong more than he was right, however, still walked away with $500. So in other words, he knows how to trade. But then this day showed up. This day being Friday, that very, very tricky day. And this is what he posted in the chat room. Right there, a loss of $1,500. And he says right there, this is what happens when you take losses early on, which everybody was taking losses. If you were behaving in a rational manner, you probably took a loss because the market behaved like it wanted to go down, and then all of a sudden it just grinded higher the rest of the day. But he took losses early on, and then he started a revenge trade. 15 losing trades in a row on BYND and BA. 15 losing trades in a row. That is exactly what happens when you start revenge trading, superhero trading. They're all one and the same. Revenge trading usually just kind of masks itself as a superhero trading type gimmick, but that's what can happen. And like I said, this person, he's a great trader. He's a good trader. He knows what he's doing. But I commend him for just calling himself out. And that's why the community is awesome. That's why I believe, maybe not necessarily my community, but any community, iron sharpens iron. When you surround yourself with people that are willing to share these mess ups, when they're willing to share the mistakes they're making, this is so valuable that you're able to see this sort of stuff. And that's how the community is you have people show their wins and because people win. But you also have those same people are like, yeah, you know what? You can't win all the time. And that transparency is priceless. Here we have another example. And again, this member knows how to trade. In fact, I did a video on him solely about how he took Joey is his name, but $150 and has grown it to $25,000. And I did this video a couple months ago. But needless to say, he's doing great. He's well above 25,000 now. However, again, on this very same day, you can see now he calls out Agent Folly because that's, and that's why I said, hey, you're not the only one. So then Joey goes on to say, today I gave back my entire week. Once again, and Joey knows how to trade. My point is, those voices, the desire to be a superhero, the desire to, I gotta, let's go. It's very real. And even when you know what you're doing, it can still bite you. It bit me, right? That's why I started off this entire video showing you my mistake from several weeks ago. So this is by no means me sitting here saying, and I never make mistakes. No, I started off this video with my mistake. That's why I'm proud that I was able to still close out the week green when we had Joey, who's an awesome, great trader, admit that he gave back his entire week in one day. How so? Well, it was the result of revenge trading, forcing trades. In other words, trying to be a superhero. My first trade loss today was $200 and could have stopped there and kept a great winning week. Yep, and that's usually what happens is sometimes you got to just step back and say, you know what? That was annoying. That was goofy. I took a loss. But you know what? I'm still green on the week. However, he says, but kept trying to force trades in such bad chop. Bad chop just means, that's another word for goofiness, for annoying markets, for markets that just aren't necessarily the norm that they would normally be. But that's what can happen. And that's why I'm proud of my results, because I recognize the superhero and I avoided. I lowered the position size, and I was still able to, like you said, salvage my week. When other really quality traders, really good traders, the voice just got them. Just like it got me a few weeks ago, it got them. And I don't want it to get you. I want you to realize that these voices, these tendencies exist out there that want to turn you into a superhero. But when you do that, and especially when you combine superhero trading in very annoying, very bizarre markets, like the particular day was here that I showed you here, it's a recipe for disaster. So you have to be very, very careful with it. So if you enjoyed this video, a few requests here. First off, hit that like button. Really goes a long way. And if you enjoy these types of videos, that would really help me out. And also leave a comment down below. Always like to hear from you as viewers. So questions, comments, suggestions, anything. I'm always, and I do my best. If you've ever seen it in my past videos, you'll see that I read comments and reply to them. So yeah, leave a comment down below. And then finally, if you are interested in joining this community, I showed some of these members' results and how they're just admitting to their mistakes, claytrader.com/team. You can go check that out. And then finally, check out the channel as a whole. And if you like what you see, I hope you decide to hit that subscribe button. But yeah, get out there, avoid the desire, avoid the motivation to trade like a superhero, because as you saw, it can get you in trouble. But if you realize it, reduce your position size, you can keep yourself in the green and give yourself a good, solid week. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.